Yes, I can hear you.
Okay, all righty. Hello, everybody, and welcome. Welcome to Developing Your Operational Budget. Glad to have everybody here. This is the Indian Dispute Resolution Services, otherwise known as IDRS, and this is the IDRS Acorn Project. And so today we're going to learn about developing your operational budget with a little tool that we use in some of the classes we teach for projecting your cash flows. And we're going to adapt that because it's basically a cash flow budget. Just a little bit of housekeeping here. We are on a webinar format, so we're on Zoom, but there's a couple of different types of ways we present webinars. We either or present the trainings that we do. We either do it in meeting format or in webinar. In the meeting format, it's very easy to come off mute and I can see everybody's faces. Because this is a larger meeting and we have it set up as a webinar, it's a little bit more difficult to do that. So what we instead ask you to do is put questions that you have in the chat box, and I will go and as we go through the meeting, we have Lynn from IDRS as well on, and she'll break in if I'm not answering the questions and let me know that I need to address that. But we encourage you guys to ask questions, and if there's people that want to stick around after and talk, there's ways that we can at least unmute people, and I think we can even get them on video. I'm sure that we have all the ways. Lynn is the Zoom master, so she'll make sure to take care of that. So thank you, Camille. Excited that you're here. And hi back to Mary Beth out in Oklahoma. Both Camille and Mary Beth are in Oklahoma. So hello to both of you. So I'm practicing what I preach and having and going on the text box there. So we're here for developing your operational budget. Before we get started, I want to thank the folks that are funding this webinar, the USDA Rural Development, the Small Business Administration. We have a prime grant from them, and the California Governor's Office of Business and Economic Development. They're also funding a portion of this webinar. So we're very appreciative to have them as sponsors, and want to send out our thanks, and hope they continue to fund great programs that we provide. Who are we? Like I mentioned just a few minutes ago, we're the Indian Dispute Resolution Services. On our left is our organization's logo and website. We're at www.idrsinc.org. However, this presentation is a presentation of the IDRS Acorn Project, and that's our program to provide training and technical assistance or counseling assistance to your small business for Native small business owners and Native artists. So that program is called IDRS Acorn Project. You can find us. We have built a website specifically for Native entrepreneurs and Native artists at www.nativebiz.org, and you can find that there. And so just to kind of give you a little bit of who we are, we provide training before the pandemic hit. We provided a lot of on-site, in-community, on-res training. And would go around all over, primarily California, Nevada, Oregon, on the Navajo Nation, and in Oklahoma, and would do on-site training. Also worked with tribes and Native organizational partners, such as the Nimiipuu Community Development Fund up on Nez Perce and the Institute of American Indian Arts in Santa Fe. And so we're so thankful for all our tribal and Native organizational partners as well. However, since the pandemic has hit, we haven't been able to travel. And so what we have been doing is switching on and providing a lot of that training online. And so now we're doing both of our webinars that we had done previously online, but now we're doing full-on trainings such as Mary Beth, who said hello. So she is our trainer of our Etsy course, and we'll talk a little bit about Etsy later on in this workshop. Lynn, I don't know if, I hope everybody can still hear me. Mary Beth has said she has lost audio, and so I hope
I can hear you, so I assume it's probably just a problem on her end.
Okay, sounds good. All right, so we will roll on. Okay, so who am I? I'm Mark Thompson. I'm the executive director here, and I've been here for about a little over 17 years. But besides my role here at IDRS, and in doing, and running the organization and also providing trainings like this, I too am a small business owner, and I run a small horse boarding facility with my wife. My wife is the one who really runs it. I'm the one who just, when she says load the hay up in the tractor or something, that's what I do. But I previously had helped run a pizza restaurant with a buddy of mine in a small cafe. I used to be a mobile DJ, had a mobile DJ business that I did. So I'm as well, very similar to a lot of you guys out there, a small business owner and interested in this and interested in how to make my business self-sustainable. And so that's what we're, so we are practicing what we're preaching today. So how can you reach us? You've already got our website, and our website has all kinds of information about how you can, and I should have said this before while I was talking about this, because I was just talking about training, but we also do counseling. And so on our website, nativebiz.org, you could find out about training and technical assistance and find out how to sign up for that, or technical assistance for counseling. It's totally, and all our services are free of charge. However, if you want to give us a call, that's our phone number, 916-482-5800, or you can reach me at my email is mark@idrsinc.org. And even if you don't get that down, I'll have that up later on in the webinar. Okay, so objectives, you know what? I forgot to change my objective slide, so we're going to skip objective slides. So why are we doing this webinar? So this is the beginning of the year. Hold on, went back. This is the beginning of the year, and it's a good time to get a budget in place, right? So we're starting out, we're going to try to, get some good principles in place this year. We just recently did a webinar on record keeping. I did that at the end of the year, and we're talking about, okay, now it's the end of the year, could be tax time. Maybe it's time to start putting in place a system and getting your record keeping going. So we're thinking the same thing. If you don't have a organizational budget for your small business or an operational budget, maybe time to put that in place and make sure as you go through the year that you can, have good management of the income that comes into your business, allow you to see where shortfalls are, and we'll talk about what the operational budget is used for. And then, helps you have a budget. That's one of the reasons why we initially wanted to do this, and we were actually going to do this last month and had to cancel it. We want to make sure that you have a budget in place if you are applying for a grant and a grant requires it. So last month, there was a grant from the National Congress of American Indians, and in applying for that, it was open for Native entrepreneurs, Native-owned small businesses, and they required an operational budget. And we were hearing from a lot of people that they weren't going to apply because they didn't have a budget in place. And we said, hey, we need to get that budget we need to help you guys get that budget in place. So we planned this webinar, and in planning the webinar, they actually closed the grant. They ran out of money. So we'll talk a little bit about a couple other grants. An operational budget is not required for them. However, in case something occurs, we want you guys to have the tools to be able to have one in place. It's good to have one in place as a best practice already, but in case you don't have one in place and you need one for applying for a loan, because there's now with the COVID-19, they have several loans available, but we just want you to have the tools to be able to create one if you need to do so. So what is a budget? A budget, according to the Merriam-Webster dictionary, is just a plan for the coordination of resources and expenditures. And that could be within your business, but that could also be within your family, right? So that's why when we're talking about some of the advertising, you may have seen that, we're going to be talking in this webinar about a budget for a business specifically. However, a lot of these same principles you can use in your family if you are developing a budget for your family. There are some other things that you may put in place, but a lot of the same principles are going to apply. And just in layman's terms, or how I might describe a budget, it's just what revenue you believe you will bring into your business over a period of time, right? So that's, we're going to be looking at the next year, but it doesn't have to be just the next year. It could be longer than that. It could be shorter than that. And what you will have to spend to generate that revenue. So you're going to talk about, okay, here's all the things that I have and what do I have to spend. Now, a little bit of a different definition is if we were talking about our family, right? If you have a job, the money that you're spending within your family is not to generate that revenue, right? You're going to work and generating that revenue, but it's things that you need to spend within your family to, keep a roof over your head, to keep the lights on, to make sure your kids are happy, right? Got to budget in maybe a vacation, maybe some toys in there, presents for Christmas. So all those things. So those are some different categories that you'll have in your family budget. But all it is different categories. You might budget some of those similar things in your, you'll have different categories, but those there will be categories that you'll budget for in your regular business budget as well. So why is budgeting important to do? Okay, so it helps you make sound financial decisions and plan for a period of time, right? So that's one of the main reasons. So we're not just doing this. Now we said that we want you to have the tool to be able to go and apply for the grant, and that's true. So if you said, hey, budgeting's not for me, we at least want you to be able to have that. But really what the reason why you are going to develop a budget is because when you see a budget, you can now plan and say, what I'm doing now, the way I've laid it out, it doesn't work, or I need to be able to cut something to make it work, and being able to identify that. So there in the second bullet point, helps you identify things that you need to fix your finances and how to do it, whether you're going to cut expenses, you're going to have to grow revenue, or you have to do both. Also, we talk about it in the feasibility portion of a business plan. If you develop something like this and you see that it's just not going to work, then you may choose not to move forward, with your business. Or you may say, okay, I need to really change up how I do my business because this isn't going to work the way I'd like it to. So those are all certain things that you may want to, that you'll be able to use the budget to help you with. It helps you minimize risk, right? Because obviously if you're going and you're investigating this on a regular basis, then that will help you out. It helps you see the difference between your plan and reality, right? So we'll talk about not only developing the budget, but coming back and checking it. And then it helps you manage incoming and outgoing funds. So once you get your budget in place, now as things are received into the business, now you know where to put them, where to save them. You say, hey, I have something that I have coming up in 6 months. I need to start a little bit of a fund to have resources available for that. Helps you land funding to grow your business, like the grants we just talked about. Okay. And so how do we come up with the numbers for the budget? So I'm kind of moving fast here because I'm going to go into a number of different charts. Also want to say everything that we talk about today is available to you. We'll send to you as far as the webinar and the slides, the slide deck. We'll also send you some of the different spreadsheets that we're going to use. So I don't want you to think as we go through this that we're not going to, you have to write everything down or you can't get it. We're going to make sure that you guys have it. So budgeting. So now we've talked about why we're going to budget, and hopefully we've convinced you that it is a good tool. And I think people just generally accept that. They realize even in personal finances, boy, it's hard to pay the credit card every month. I need to get a budget, right? Man, where did all my money go? Man, we need to get a budget, right? So I think that that many people realize that having a budget in place is a good financial tool to help you as you go through and plan your business, plan your family's finances. So we say, okay, now we need a budget. How do we go about developing it? And really a budget, all it is, as we talked about before, is just numbers on a page, right? You're showing revenue, money coming into your business and money going out, and talking about what different categories need to be in the budget. So where do we get all that information that goes into the budget? I think we have to first realize that budgeting is not going to be perfect, right? And we're not going to be exact. First of all, we're trying to talk about the future, right? And so we don't know exactly what's going to happen in the future. There's always unexpected things, and there could be unexpected things that are bad, but there could be unexpected things that are good. And you may all of a sudden produce a product that just takes off like wildfire, and you're earning way more than you ever thought that you could earn. Things like that happen as well. It's not just all bad, but it's very hard to know those things 12 months away. And it's even harder if you're doing a longer term budget. So just realize that. And we'll talk a little bit about how we can kind of make our budget more accurate as we go through. So some of the easiest ways to get numbers into our budget. The easiest way is if you start with a previous budget. So if you had a budget from last year, and now you can go through and say, okay, how far was I off? And what do I, and put a spin on it and say, okay, this is what I envision is going to happen this next year. And then change some of those numbers, and now you have a new budget. Probably for most of us, we don't have a budget from last year, so we're starting from scratch. Okay, so all right, we don't have a previous budget. What about previous financial statements? Anytime you have things that you've done in the past, it's going to be a lot easier to produce numbers into the future. If you have historical business data, you know how much sales you had last year. So you could say, okay, I think things are going to be the same as last year. It's okay. So now a lot of those sales numbers can transfer over to your current budget. Now, some of us, though, may not have any numbers from last year. You guys are a startup budget, or you guys are, excuse me, I shouldn't have said that. You guys are starting a business. And so you need to create a startup budget and, a new budget for the year. Okay, so how do we go about that? The best way to start a budget is oftentimes to talk about sales and revenue. And you're going to hear me as we're talking about this in the business context, but I always like to throw in the personal context as well, in case there's anybody here that is interested in starting a personal budget for their family. And if we're starting with sales and revenue in the family context, really that's just income coming into the family, right? That could be from a job for both yourself, your partner, somebody else in the family, whoever's contributing to the household income, right? What jobs do they have? That could be a business, and maybe a job is more predictable because you may be on a salary or you may have a set number of hours every month. But it may also, whereas if you're incorporating business income, that may be seasonal. It may fluctuate as it goes through the year. It could also be other types of benefits that you get. It could be per cap income. It could be, benefits that you get from social service agencies. But those are how you're going to want to think about the revenue that comes into your family, right? The different types of earning streams. And you're going to want to add all those up and put those in for this, for your sales, for your revenue for your family budget. I'm just using the term sales and revenue. They're kind of interchangeable, and really all that is income. It's just income to your business. It's the gross income, all the money that's coming in. Okay, so if we're looking back at the business context, now what we're going to do is we're going to make assumptions that's based on the type of product or service you sell. So everything that we're doing now is we don't know the future, right? So what we have to do is we have to make guesstimates. We have to guess. We have to do research, or make a guess, then do research, or do some research, then make a guess. Then we have to kind of check to see, okay, am I too far off there? And I'll show you in just a few minutes an example of somebody that may have projected too much in their budget. And so they had to pare it back a little bit. And so that's what we're trying to do, right? So it's not like I'm just going to throw this out. I'm going to throw a number out and I'm going to be right the first time, right? And I just know everything in my head. Maybe you have that if you had previous financial data, either a budget or the financial statements. But if you're trying to generate this from scratch, you probably don't have all that information. So you're going to have to do this over multiple iterations, right? You're going to do it, you're going to test it a little bit, then you're going to come back, and then we're going to talk a little. So everything we're doing here now is we're thinking about different ways that we can do these iterations. Okay. So, and of course, as we go through and at the beginning of the business, if we don't have all those numbers, we're going to have limited data to start with. And then that means the budget's going to be less detailed, and that's okay. And think about it that way. Don't think I have to produce and spend every nickel that I'm going to make or every penny I'm going to make, right? Instead, think, okay, I'm going to do the best I can to kind of get a more simplified budget to start. And then as you get that data, then you can come back and revise it and make it more detailed. Okay. So just a word here on, I asked the questions, how many different products or services do you have? The more products or services that you have also complicates the type of budget that you're going to produce. If you have one main service, I'll give you an example. So I was a mobile DJ for many years, and generally we would just charge by the hour. And let's say, I think at one point we were $100 an hour to do a wedding or a school dance or something like that. And so if I say every week we're going to do 10 hours of DJing, I'm going to do a 5-hour wedding, I'll do a 3-hour school dance, and then maybe we'll have a 2-hour party or something like that, just for an example. Then I could say 10 times 100, that's $1,000 that I'm going to make. And you can see I can estimate every single weekend what I think I'm going to make, and it makes it very easy to plug those numbers in. If I'm a retail business and I have lots of different items, how am I going to go and do that? How of this particular widget that I sell, right? How many of those am I going to sell versus, okay, of this? So really what you have to do in that case, it's much more difficult. And we'll talk a little bit about getting industry averages, but that's sometimes what you have to do. And then sometimes it's just going to be very hard to kind of do a prediction if you don't have that. So what you then do is there's some other techniques that we might use, and we'll talk about that in a moment. Another thing to think about is what is a key driver of revenue. So these could also be, when you're thinking about developing the budget and to make it more accurate, are there things that you're going to do that are going to increase sales? So maybe you're going to have big advertising campaigns, right? So if you have a big advertising campaign, your sales should increase after that fact, right? And that should show on the budget. Here's a big expenditure of advertising money, and so now I should have big amounts of I should have more sales in the months that follow. Another key driver, I know we have a lot of native artists, shout out to Mary Beth again, with her and her husband with Moonhawk Art, they go around to different powwows and craft fairs, and they sell the different things that they sell: cuff bracelets, tiles, t-shirts. They have a whole line of their artwork that they've put on different products, right? So they can plan which shows they are going to go to. Those are key drivers of their revenue, right? If now with the pandemic being limited, they're going to say, oh, those are canceled, so I have to reduce my budget because I'm not going to go to a show like Cahokia. And at Cahokia, now see, they would have this previous financial data, but even if they weren't going, they may estimate and say, this is what I believe the average I will make at a certain craft fair, and I'm going to go to these craft fairs over the next year. And if all of a sudden those craft fairs get canceled, you can see how that would decrease revenue and how that would change the budget, right? But you could also see, if you say, I make this much at a craft fair and I'm going to go to this many craft fairs. Now it's a simple thing. Okay, I'm going to make $500 at each craft fair. I'm going to go to 20 craft fairs over the next year. 20 times 500 is $10,000. And you can plug this in even dates wise, because if you know when those craft fairs are held, makes it very easy to plot that along on the revenue that you're getting. And like I said before, we're just making a guess, and we're going to try to back it up with research, back it up with experience as it comes in. Okay, so let's just use kind of an example. Let me move some windows here so I can get in and see what I'm looking at. Okay, so this is one thing from the Indianpreneurship curriculum that we've taught for many years. Changed the numbers a little bit, but the general gist is still there. So in the book, there was a contractor, and he was trying to figure out his projected operational budget. Okay, so he's got 3 basic services, and you can see when you have fewer services, this is a little bit easier to do. So his small repairs are $500, his major repairs are $6,000, and his remodels are $12,000. Okay, and then there's his time it takes for each of those, his average, right? From going and meeting with the client to going and buying supplies, or things that are needed for the repair that he might not have, to coming in and doing the repair again. And that whole thing, he figures the small repairs are 8 hours, major repairs are 40 hours, and remodels are 80 hours. So anything that you guys can do to map similar things out in your business. So I'm going to have an earrings example, and I didn't map it out as detailed as this, but in your business, if you can say, okay, it takes me 30 minutes to make a pair of earrings, and I work during the day, so at night I'm going to have an average of 2 hours to spend making earrings, right? So every night I can make 4 pairs of earrings. And then you may say some of those days I'm not able to work, but that allows you to start making that projection of how much how much that you can produce. And from there, and what we're doing here is, right, we're just trying to get rough estimates, because we don't know the future. We're going to come back and make these numbers better, but what we're trying to do is, how can we get any numbers in there? And these are some of the ways that you can do it just by the amount that you can produce. So here, this gentleman, he actually predicted, he says, okay, I think that I can do, actually I should have changed the number per month, because I changed my thing here. So that should have been 5 per month, which translates to 60 a year. It should have been like a 1.3 per month on the major repairs, translates to 16 per year, and remodels, he's going to do 1 a month, and that translates to 12 per year. And you can see all he's done is he multiplies then what that average cost he's figured out. And this will be different also for your business, right? This gentleman was thinking, okay, it may be $1,000 to replace a water heater, but it may only be $100 to replace a doorknob, right? How many am I going to do of each, right? We're just guessing right now. That's one of the, I wish there was, hey, just look up this number and this is where you get the number. I wish it was that easy, but these are some of the introspective things that we have to do in our business, really looking inward to see, okay, what does it take to do my service? How many of these things do I believe I'm going to do? This is where I'll give a plug for market research. So Lynn was just doing a webinar. We're going to be doing that webinar again next month on looking up and trying to find customers. Other things that we do in market research that we'll be reviewing over the next couple months is looking at your competitors. This is why we always push market research so hard, because if you do market research, these are where some of the areas where you can find some of this data that will allow you to plug into your budget. Okay, so anyway, so they multiplied out. It says he's going to get $30,000 in sales, $96,000 for sales in the major, 120 for remodel. Add all that, 270. Oh, this is going to be great. Now, he's not going to get all of 270 because that's going to include the materials that he's purchased. But even if he got half of that, what a great business, 135. And look at the total time, 2,080 hours, right? That's like working a full-time job. But if you think about it, and you think about how his business would probably run, he's also going to meet with customers that aren't going to purchase from him. If he's going to do remodels, he might have to have multiple meetings, and some of those multiple meetings won't won't come on as clients. He'll also have days when he can't do anything because of weather. He'll have days he can't do things because of holidays where the client won't want him to work on those days, right? So these are also things. So this is what allows you to now go and check and say, okay, take a look at I came up with my initial numbers. How can I pare it down a little bit? So just as a pared down example, so this is how we pared it down, right? So now it's 45, it's 10, it's 6. You could see the sales went down, but now he's only working 1240. Another thing we didn't talk about in the last slide is he's got to do accounting. So he's got to bill all these people. Is he hiring that out, right? That's a lot of times when you're starting out, you want to do it all, right? Because you want to capture that money. So there's only so many hours in the day to do all this stuff. Maybe some things take longer, so you might want to put a cushion in there. So this is a much more realistic category for income when you start looking at that, when you start looking at the actual amount of hours that you're going to spend on the job. And so for service businesses, this is a good way to initially go out and take a look at your different jobs that you're going to do, make a projection, and then say, okay, how long is that really going to take me? And if I have to do these other things also within my business, do I really have the ability to bill for all those hours and then pare it back? Okay, so that's one example. Let me give you a couple other examples real quick on sales and revenue. So let's say for a real estate agent, all right, there's maybe folks here in cities or rural areas that would like to sell real estate, all right, as a real estate agent. So where are you going to get some of these numbers? So these numbers are probably going to be provided by your broker. Definitely, you may have an average listing fee that the general fee that's standard in the area. In high cost areas, it's a lower fee, and in lower cost areas, the fee goes up. So I just put that you get half of the transaction fee, which is 2.5%. Your broker has a fee, right, that they'll tell you. So let's say the broker gets 30% of that. So you're going to get 2.5% minus that 30% of any transaction. So I put beginning agents in my brokerage have 4 transactions their first year, right? So where would you get that? Well, that's asking your broker and saying, okay, what's the average? And talking with them, right? You're doing research. That's just another form of research, interviewing people. And talking about marketing research, we talk about primary. That's where you're actually interviewing potential customers, and secondary. In a way, this is primary, right? You're reaching out and trying to find that type of data that you can go and then project this income. So maybe he says, yeah, we have some people, if you work all the time, generally they fall around 4. Some people will sell 5, some people don't sell any, but I think that the average person that comes in is going to sell 4. Okay, that's a great way to start. And you've done some research that allows you to generate that number. And then from there, now, then you want to find out, okay, well, what's the average home price in my market? Maybe it's $200,000. That may even change, because even if it's in your market, maybe the farm, and when we say what a farm is just essentially where the neighborhood that you're going to focus on. Maybe the neighborhood you're going to focus on is less than that. We know there's agents that focus on mobile home sales, right? And mobile homes tend to be substantially less than this, right? So you would want to adjust that depending on what the type of business you're going to do. So you get the average home price that you're going to sell, and now it's just multiplying it out. 200,000 times 2.5 times 70, right? That's the amount that you would be getting, because 30% will go to your broker, times 4 for that first year, turns out to 14,000. And now you can spread that out for the year. You may say, well, just as a easy way to do this in the first year, I'm probably not going to sell any in my first quarter, because now I'm just getting ramped up. And then on the second quarter, I'll do 1. In the third quarter, I'll do 1, and I'll do 2 in the fourth quarter. And then now you have a plausible X story about how you develop that income and how you're going to spread that income out throughout the year. So one more example, I make beaded earrings. I'm going to charge an average of $50 per set of earrings. So where did I get that information? Well, I just made it up for this example, but where you might get it is you might compare, what are other people in your community selling beaded earrings for, right? Are yours nicer than theirs? Are you using better materials? Are they more established and better known, so you have to charge less? You have to kind of do some research and make those decisions. However, once you kind of get a price, then you can look back at your time. How many can I actually produce each month? So I can, I've looked at my time, the time I have to spend with family, right? That's important. We don't want to cut in on family time. So the time that I have free to produce these earrings each month, I can produce 40 sets, right? And then from my research, I believe I will sell 75 of these each month, right? And it could be um, you've talked to other people in your community. How many do you sell each month, right? It could be looking online. A lot of times it's just asking people, and a lot of times business owners, they want to talk about their business. They're willing to share this. This isn't confidential data, right? Now, they may not tell you how much they make, but they'll tell you how many they sell on average. And any data that you get is good data that you can inform your business with. So if we multiply this out to get our how much money that we're going to be making each month, 75% times 40, that's how many we're going to sell. So that's 30. You multiply 30 times 50, you get 1,500. And now you have your monthly income and can now spread that out along your budget. Okay. So what if we don't have, this information, or we need, like I said in the example of the retail store, where it would be very hard to do this on every product. I don't know how many of this widget I'm going to sell, or if I'm selling cans of WD-40, I don't know how many cans of WD-40 I'm going to sell, right? How many, check out your competition, right? So if it's a fewer products, right? And let's say it's a pizza restaurant, you may just go out there and say, how many pizza boxes do I see walking out the door? Right? And you may sit there for a day and count out the pizza boxes. If you're a DJ, you may go and say, okay, how many DJs does this guy have? I'm going to go look and see where those different DJs go and how many he has playing on any weekend, right? That's not going to give you an exact total of what they're doing, right? Because you can't do that every day, but it gives you a hint. Does he have a lot of DJs going out? You may call him, the day before. If I needed to have you do a show tomorrow, are you available? If he says, oh, sure, I have a person, I have people that can do it. Well, that shows he's not all booked up. If he says, I don't have anybody, and he's got 5 DJs and he's all booked up, now those 5 DJs are working, and you could, and I'll tell you actually a way that I used to do it when I used to talk about this, as far as getting prices for different, getting the prices of different, I can't believe I'm saying this because it's recorded, but the prices of different DJs, I would have a girlfriend at the time call up and say that we're getting married, and could you send us a wedding packet and talk about, what it costs and the rates would be, and rates at different times. And then from there, now I have the rates of all these different DJs. I can say, okay, where do I want to place myself in the market? And there you go. So another way to do that is to look at industry standards. So there's industry reports. That's one of the things that we can help you with, that we can help you pull industry reports that will help you get that information out. And it doesn't give you exactly what it's going to be for your business, but what they can do is they can give you what an average business like yours will be in a certain area, and then you can extrapolate from there, right? Oftentimes you're getting this kind of general data, and then you have to change it up depending on your circumstances, right? And we're guesstimating and estimating a lot of that. So what we're going to do after the fact is we're going to come back and make these more precise with historical data. But for the time being, we're just doing the best we can. Another way you can get this information is through industry associations. A way, and I will say this though about both of those options. The smaller business that you are, such as if you're a native artist, there's not going to be an industry report for native art, right? Or for making earrings. It's just too small, right? But if you're going to start a pizza restaurant, there is industry reports for that will show you exactly what the size of your business will be. If you're going to start a small hardware store, if you're going to start a DJ business, even there's industry associations that can help you out, and what the average price is charged in different ratios and things like that. So I just wanted to let you know that it's not, all this information is not guaranteed out there, but we're just trying to suggest different places where you might get this information. If you have money, this is what some people will do. They will actually go and hire somebody in a different area. So it's not a competitor. Oftentimes, if you're dealing with a competitor in your local market, they don't want to give you this information. But there are places outside that will help you write a business plan, and they actually go to a very similar type business outside of your area. And because they're not a competitor, they're paying them, and then they'll provide financials that you can use, and they're close enough that will allow you to do your projections. That's a different way. Most of the folks that we're working with aren't going to do that, but wanted to let you know that that's an option as well. So how about expenses? Right now we've talked about sales and revenue. So let's talk about what's going to go underneath. And you're going to see this. It's a little hard because we're having you visualize right now, but you're going to actually see these reports in just a few minutes, and how this all kind of lines out. So how about expenses? Fixed costs versus variable costs. So what does that mean? So variable costs are just costs that increase or decrease in proportion to what you produce or sell. So that's inventory, right? So your cost of inventory goes up if you're selling more, right? If you're selling less, the cost of your inventory goes down. Same thing if you have a restaurant, you have food costs. If you're selling a lot of food, your food costs go up. You can see that goes up in proportion to what you sell. So what's the difference between fixed costs? They just don't increase or decrease based on, they don't increase or decrease based on what you sell. It's sometimes a little bit of a difficult subject to grasp. The reason is because, things like bookkeeping, your bookkeeping fee, it's going to be the same whether you have a lot of transactions, you have the same amount of transactions for the most part, right? It doesn't go up in proportion. The same thing with telephone, right? We have most of these cell phone plans are unlimited. So, if you got one call a month, it's going to be the same price if you've got 1,000 calls a month. But then a fixed cost is also utilities. And a lot of people will say, well, if I'm working all the time, the utilities are going to go up. Yes, that's true. And in a way, some people, especially in much larger businesses, will count some of the utilities towards variable cost. But, if you produce nothing in a month, you should have zero in food cost. And that's not technically true, because what you'll typically do is buy that food, and that will tend to spoil, right? If you're looking at inventory, though, you may have bought the inventory, but you can't expense that until you sell it. So you would actually have zero, but you're always going to have utilities. It may not be as much, but you'll always have some. And that's what I mean. So it doesn't go all the way to zero. It's a little bit of a tough concept, hard to get it in a 1-hour webinar. And also fixed costs are known as overhead. But one of the things is with fixed costs, those are much easier to plug in on your sheet that we're about to show you. Variable costs can oftentimes be a calculation of what you produce, especially if you're manufacturing things. And if we're making earrings, even if they're handmade, that's manufacturing. So that's what we're going to do. We're going to try to get a calculation for variable costs. With inventory, same type of thing we talked about earlier. If you have lots of different items, that gets to be very difficult. If you have a few different services that you could provide, you can kind of calculate, what's my variable cost to produce this? What's the type of the cost of items that I have to use to install? Going back to the real estate example, you may not really have any variable costs. Oftentimes in services, they don't do variable costs. All they do is fixed costs. Just because those costs are going to be the same if you have to pay association dues. Those are going to be the same whether you sell one house or 1,000 houses, right? And so that makes it easier in some service businesses as well. So you're going to see this. This is going to be more illustrated when we plug this into the sheet in just a minute. So here's just an example of developing your variable costs. So with beaded earrings, so what are the variable costs of those beaded earrings? Seed beads, the hooks for your ears, the wire that you wrap around. If you're using other types of materials in your earrings, such as shells or stones. And so what you would do is you would kind of calculate this up. When we used to own that pizza restaurant, we could kind of calculate and say, okay, well, it costs us to make this much of the dough, a batch of dough. And if we weigh it out, okay, the whole dough weighs this, and we use this for one pizza. Okay, so now we know that this costs this much to produce the dough. We're putting this much of cheese. The cheese costs this much per pound. We're putting this much of weight on the pizza. Now we know how much what the cost is of the cheese. Same thing with pepperoni. And you're just adding those up, and now you have the cost of one pepperoni pizza to make. Same thing you're doing here with your earrings, right? It costs me $1 in seed beads, 10 cents for the hooks, the wire, the shells, maybe that's a little bit more expensive, or a stone. And so on average, each necklace costs $5 to produce, right? And this isn't counting your labor. This is just the materials inside of the earring. And then how do you get your monthly costs? Well, we already talked about that we're going to produce 40 of these necklaces a month. So all we're doing is multiplying $40 times 5, and that equals $200. And now we're going to change some of these numbers when we start thinking about it as we go through and we plug these in to our cash flow projection sheet. However, right now we've got at least a number that we can put on there, right? We have kind of a general feeling of what area we should be in, right? We're not totally starting from scratch anymore, and that's good. So that's where we want to be. Okay, so other expenses, biz stats. Let me stop my sharing real quick on this. Hold on. I'm gonna stop this share and let me go. I'm gonna share my website here. See if I got it up. Let's see here. Oh, this is where it is. Okay, so there is a website. It's called bizstats.com. It's up on the screen right now. BizStats is a product of BizMiner. BizMiner produces industry reports like we were just talking about it. One of the nice things that BizStats does, like I said, for small businesses, really small businesses, really unique businesses, you're not going to find things in here. However, for a little bit larger businesses, even if there's independently operated, you can see they have a category here for sole proprietors, and they have a number of different things. I'm going to go down here to real estate. Okay, and then here they have a real estate offices of real estate agents and brokers. So if you were, now this is the office, so this isn't specifically for an individual real estate agent, but let's say you were a broker and you were starting your office. So what they do is they give you percentages based on sales. So, oh goodness, sorry about that. My monitor, my backlight turned off. So whatever your sales are, so we calculated sales just a few minutes ago, whatever your sales are, now you can say that I can calculate different categories based on percentages. So generally, if I have an office, I'm going to pay about 2% of my gross sales to rent. I'm going to pay about 1% in taxes. I'm going to pay about 7% to contract labor. And so you can actually just go down there. And so if you've said, I'm going to make $10,000 in a month and 2% is rent. So what's the rent? You could just multiply that out, right? You can say 10,000 times 2%, that's $200. It's pretty unrealistic. Generally it would be a much higher dollar amount, but that's also where you're not going to take these numbers as just gospel. What you're going to do is you're going to take these numbers and adjust them to your situation, because where it may say 2% of rent, if you know that you have a much higher rent because you already have a lease, then that's the number you would plug in, right? You wouldn't just plug in 2%. You may say, I'm operating the business out of my home. I don't have rent. So you would take that off. And so they have a number of different businesses that you can go and get these statistics with. I'll just go through here and take a look at one other one, just talking about them. So we have restaurants, so food services and drinking places. Here we go for sales again. Here's the cost of sales. It's much higher than the real estate. Why? Because that's the food costs. So on average, 40% of what your sales comes in goes out immediately in food costs, right? And then the labor portion to prepare that food. So now my gross profit is much higher, right? And so that's all we're doing to get sales from sales to gross profit is to subtract what they call my cost of goods sold. And then salaries, 15%. And you can see how you could just calculate this in. So if you said, once again, I'm going to make $10,000 from my restaurant, 40% is going to go out in food costs, and you could just plug that in. If you had no other idea of how to get a number, at least now you have a general number. And then as you go through your business, you can come back and revise that, especially if your business is lower cost or higher cost, right? You're going to want to make sure you revise that number. But at least in your planning phase, you have a place to start. Okay. All right. So that's biz stats. So let me go back to the presentation here. Let me share my screen again. Okay. So we're also going to project the easy stuff first, right? So one of the things I say that is similar monthly bills. So if you're bringing your telephone into your business, one of the things you're going to want to do is it's $50 a month. You just plug that along each month, right? It may change a few dollars, but that's really small. You're not going to really have to worry about that. So you just plug that in each month. Same thing, like if you've got insurance, the insurance quote is going to tell you it's going to be this much every month, something you can plug in. So that's another way you can plug in. You want to find those easy fixed cost expenses that are going to be very similar every single month. Okay, so now we've talked about variable costs and how we might do variable costs, how we might do fixed costs. Another thing that we might want to use is we may say, okay, what I'm going to do is I'm going to actually start operating my business, and I'm going to go in a month or two, and I'm going to gather some data and then come back and prepare my budget. And a tool that you can use to do that is a daily financial tracker. And I just designed one real simply last night. So I'm going to stop my share here. I'm going to share a different screen, and let me show you a daily financial tracker. So I hope you guys can all see this. I know it's a little bit small. I'm going to try to bring it up as much as possible. So all this is we have for the month, and you put whatever month you are, and then as you get income, right? Obviously, if you have fewer sales, like you're in a service business, this is much easier because there's only so many lines. But what you can do is you can say, okay, I had sales at the powwow, and let's see here, and that was on the 6th of the month, and that was $450, right? And then you can say, okay, what were my expenses? And then you could have something like gasoline, and just as they come in, you can plug them in, right? And you could say, okay, I spent $50 in gasoline here. I bought supplies to make my earrings on the 1st of the month, and I paid $100, right? And on your daily expense tracker, as you go through the month, you can just, every time you have a transaction that affects your business, you can plug it in here in your daily expense tracker, all right? And then at the end of the month, I'm going to slide over here to the other side since we only have so much room. What it'll do is it'll add it up. Let's say we bought supplies again on the 17th, right? So I'm going to put some $80 there. Now you can see it'll say $80. Well, now you can say, what is this my typical month? After you go through the month, is this my typical month? If it's your typical month, now you can just multiply those out across the 12 months as you're creating your cash flow budget. If it's not a typical month, let's say this month you were really intent on developing a lot of inventory, so you spent a lot more on supplies. So you say in future months, I'm going to decrease supplies. I'm just going to estimate it. Maybe I'm going to be 25% less. And you could just make that calculation and then carry that across the months. But this is another tool that will allow you that if you spend a month or two in tracking figures down of everything you go into the business, now you have some historical data. See, it doesn't take long. It doesn't take years of historical data. It just takes a month or two to at least give you some idea of what it's going to take to get your business started. So this is a daily expense tracker. Like I said, we're going to send all this to you. So let me stop share on that. And I am moving fairly quickly because there's still a lot to get to, and I'm almost at an hour. So I wanted to share one other exercise with you before I go. And so that's why it's taking just a little bit of time. So we talked about fixed costs, variable costs, biz stats, the easy stuff, financial tracker, and then predict one-time big expenditures, especially on the startup budget. So we have a startup budget. If you've never been in business, there may be things that you need to purchase up front. That's the startup budget. Oftentimes, those are not items that we would say are recurring, that happen on a regular basis. Either it's monthly or quarterly, whatever the recurring time frame is. But this may also happen within your business. You may say, I'm going to have to get a new sewing machine, right? Let's say you're a seamstress. I'm going to have to get a new sewing machine because this is only going to last me, a few more months. And so you budget that out. In 5 months, I'm going to have to purchase this, right? And so you may be putting money away. You may have a sewing machine fund that you build in, right? Just like you would have that in your family budget, a vacation fund, you may have a sewing machine fund so that you're putting money away every single month so that when the time comes, it's there, right? Let's say you're not putting away fund, you may, but you have access to credit or credit with the person that's going to sell you. Then you could say, in that month, I'm going to have this big expense, right? But you're plugging that in, right? You're anticipating those big expenditures, right? That's going to help you make your budget more accurate, right? Because what the worst thing to do is to develop your revenue figures, your budget figures, it all looks good. And you say, if I can just do this, I'm going to be great this year. And then those big expenditures come up that you didn't anticipated. And then that ruins everything. And then you're out of business because you can't cover that. So that's what we're trying to avoid with the budget, right? We're trying to anticipate all these. That's going to allow us to plan. So the big tool we're going to use, sorry, it's taken a little bit of time to get to it, but now we're going to plug these numbers in. And this isn't going to take me a little bit long. I'm sorry, I'm going to go a little bit over, but this is kind of the important thing of the webinar and plugging it into our cash flow projection statement. So we're projecting a cash budget because cash is king. So we could also do this with profit or loss, but when you run out of money, with cash, you can't go negative cash, right? Just cash doesn't, when you go to zero, it's zero, right? If you're holding cash in your hand. So you have to find ways to replenish that cash. So that's why you want to project cash, because if you can't replenish that cash, then you are out of business, right? And maybe if you're a small business, like you're producing earrings at your home, you can go several months. And maybe what you'll do is you'll replenish that cash through a job you're working at. However, if you're a much larger business, let's say you're a restaurant and you have a lease every single month and you have employees and you run out of cash and there's no way to get more cash in, the lease still goes on, right? They're going to force you into bankruptcy. They're going to essentially end your business. They're going to take the assets that you have in that restaurant, your mixers and everything, to cover the debt on the lease. So that's why, especially the larger your business goes, you want to make sure that you don't run out of cash. All right. And so what also we're going to do is we're going to spread this income throughout the year. So do you have a calculation for your variable expenses? We talked about how we're going to do it. I'm going to use the earring example. And then we're going to plug in expenses that are predictable and remain the same each month, right? So let me show you the tool we're using now. So I'm going to bring this spreadsheet up in just a minute, but here I'm just going to kind of talk about how this works, right? So this is the cash flow projection that we teach in our business planning classes. Okay, so we have a startup column that's right here. It should come up right there. So that's anything before you start up in your business. Right? Anything that you're going to spend before you actually go in and try to start selling your product, you're going to put there in the startup. Now, if you're already in business, you may not use the startup. You may just start at one, whatever month period you are, right? And so, and in month one, I'm going to be talking about month one is January. But I know if there's any folks from a nonprofit on the line, month one could be July, because a lot of budgets, a lot of nonprofits, their fiscal year runs from July to June. IDRS's does. If you're in the federal government, their fiscal year runs from October through the end of September. So their one may be October. So The one can be anything. You could even change one. When we send you the spreadsheet, you could change one and put January, whatever month that you want to put there. But we're just taking it as January. So, but if you're already in business, you may start this as one because you're not having these big expenditures in the startup budget, all right? And then what we're going to do is we're just going to start with cash on hand. Do you have anything in a bank account, any cash at all? We're going to put that there on line A. So that's what we start. And then what we'll do then is, as we work and how we actually start entering numbers, if you believe any cash is going to come into the business, we have cash sales. That's generally the things that you're going to sell. We're not going to talk about accounts receivable here, but that would be another thing if people were paying accounts receivable, or if you were getting investment equity, investment capital, which is you're selling a portion of your business, or loan proceeds into the business. I'm actually going to hide some of these categories, but I just want to let you know, cash receipts are anything you get into your business, any cash. So it does not just have to be sales. Okay. And so we'd add up there, and then we'd put that number just above the arrow and the zero. And then we would add your cash on hand with your B, cash receipts, and you get total cash available. And then now we'd start entering what we believe the expenses will be throughout the year. Okay. Then we would add our expenses and put that total there. And then we have other operating costs. So other operating costs is anything that you're spending cash on, loan principal payments. So, and the reason why they're differentiating these, if you know anything about accounting, on the balance sheet, on the profit and loss statement, if you're doing accrual accounting, if you're making a loan principal payment, you do not show that loan principal payment as an expense on your balance sheet. On your profit and loss statement. Sorry, it's getting jumbled in my head. But here, because you're actually spending cash, you want to show that. Now, if your business is running on the cash accounting system, you would show that on your profit and loss statement. So I just want to say, so they're showing things because in this cash method, even if you're using the accrual accounting system, some of these things would not typically be shown. So that's the reason. Same thing with capital purchases, because what you do in an accrual system is you don't talk about when you actually buy it. How you expense that is through a method called depreciation. Depreciation, way too complicated to talk about here, but that's what would actually go on your profit and loss statement. But if you spent cash to buy that capital purchase, we definitely want to show that that money is leaving the business. Other startup costs, reserve and escrow, such as like you have like a security deposit, things like that, and owner's withdrawal, and we'll talk about that in just a second. So we're going to add up E, other operating costs, put it there. Then we're going to add D plus E, that's going to be total cash out just above the arrow. And then what we do is we actually subtract C from up above, and we subtract it from F, the line above, and that's what we get is our ending cash balance for the month. And then what we do with that is we transfer that from the bottom of the page, and we take it to the top. And we start the next month with the cash on hand, that we ended from the previous month. And so, and all we're going to do is we're going to continue to fill this out until we have the entire spreadsheet filled out. So I'm going to stop just real quickly there, and I'm going to share my screen, and I'm going to bring up my blank one. And so I have a couple things that I'm just going to run through real quick, just to see how I would fill this out. So I'm going to start shutting some of these lines, just so you guys can see the whole thing on the screen, but just know that these are there, and that these lines will be there when you get your sheet. So I'm just going to hide some of these up here, and I'm not going to use accounts receivable for investment in this. So I'm going to hide those, and I'll hide some of these others as we go through it. Okay, so one of the first things that we did is we estimated that we're going to sell 30 earrings a month, right? It was 75 times 40, what we produced. And we're going to sell those at $50 an earring, right? So that is going to be $1,500 a month. So that's what we have, cash sales. And all we would do is we can bring that across the entire line. And one of the cool things about doing this in a spreadsheet, as you can see, is it just does the math for you, right? So you don't have to sit there and add all these up. So when I did that, it brought it all across. And the far left total over here where my mouse is, $18,000, it added up what my cash sales were going to be for the year. And then what's going on here is it's doing cash on hand, because all it's doing is it's adding down below because we haven't taken any expenses off. But all those calculations are there for you already. So that's what makes it nice. Okay. So so let's say I did, this is my first iteration on income, but I did some other things as well. I did some other research, and I said, you know what, I'm going to be a little bit heavier in November and December. So because Christmas time's coming up, right? People are going to be spending. So maybe I changed that up here. I'm still going to spend 8,000, but because I believe over here I'm going to be a little bit less. Because I'm just ramping up my business. So the first couple months I may only spend a portion of what I believed I was going to spend, right? Over here, and okay, then maybe I have a dip in June. Maybe I'm going to take a vacation, right? It could be anything personal in the business, could be a trend that you see in the business. And the 7th month here, I think I'm going to sell a little bit more because my tribe's annual powwow is in July. So I'm gonna have a booth there. So you see, these are the things that you're thinking about when you're anticipating. And so you come up with your initial calculation for revenue, and now you're going to go in and try to adjust that based on other things that you think that you're going to see, right? So we looked at holidays. We looked at what we believe we're getting a slow start. We looked at an event that we believe we're going to sell more, and we plugged all that in. So think about your business's quirks. Seasonal, are you a seasonal business, right? So if you're selling ice cream, probably going to have a lot more sales in the summer than you're going to have in the winter. You may not have any sales because if you're selling like at powwows, there's no powwows to go to, right? So think about something like that. Are you doing something online, like in retail? Okay, probably going to have more sales during Christmas. Probably going to be a lull. People spend all their money for Christmas, so you're going to have a lull at the beginning of the year. So be thinking about that, right? It's going to be particular to your own business, but you want to be thinking about it. Okay, so so now we go down here. So I just have purchases, but you can see this is also called cost of goods sold, and you can change any of these items to match the different categories that would be appropriate for your business. But one of the things we're going to do is we're just going to start. So even before I start the business, I'm producing these necklaces, or excuse me, earrings. I actually put necklaces there, but it's earrings. And I already calculated what the cost was, right? I said it was going to be $200 a month, and I'm doing it in my startup, right? I'm doing it in my startup budget, and I'm just producing these all across the month. And all I'm doing is just dragging it across, and there goes what I'm producing. Now, one of the things I might think of, that Christmas, that's going to be very busy. First, we got Christmas. I'm going to be with my family, right? So I'm not going to be working for a portion of the year. So I'm going to produce less just based on that. Also, I'm going to have to be shipping all of this stuff because some of the stuff I'm doing in person, but a lot of the stuff I'm going to try to start moving into Etsy. Okay. So if I'm moving into Etsy, I'm going to have to be shipping. So it's going to take a lot of my time. So maybe I lower what my projection is with the number of earrings that I'm producing. Maybe I'm going to produce half what I would normally do, right? And so you can see I've got my initial calculations, and then now I'm going in and I'm just adjusting based on what I believe is going to be in my business. Okay, so I'm just going to plug in some different categories here. So we have advertising. I'm going to make up some business cards before I start the business. Then you know what I want to do? I want to get this primed up to start generating some sales. So in October, I may do some Facebook ads, maybe do some Etsy ads, and I may do a little bit less there in December, right? Just thinking about what I'm going to be doing through the year. Okay. So, I'm not really putting in a lot of my gas I'm going to have, so I'm not putting in all my gas that I have in my car, but I know I'm going to be running errands every month. So I'm just going to at least charge off what my gas is going to be. So I'm going to have some 50 before I start. And actually, you know what? I'm going to start that here. And then I'm actually going to carry that across. But you see this? I'm going to go to my powwow in July. So I know there that I'm going to have to get at least another full tank of gas. So that's one way that you would calculate that. Okay. Office expense. I'm gonna buy some pens and paper and a accounting book so I can calculate this. All right. So that's just gonna do that in the startup phase in my telephone. And I'm sorry, I'm going through this quickly. In class, I'd have you guys be filling this in, but we don't all have that opportunity. So I'm just moving quickly so you guys can see how this looks. Telephone, I'm bringing it all across. So that's going to be $50 a month. I need my cell phone to operate the business. So now I'm starting to ship, right? In the beginning, maybe I wasn't going to ship. And actually, I'm going to close some of these because I'm not going to have any payroll. I'm not going to have outside services. So what is that? Just any independent contractor that I might have. So that's what independent outside services are. Professional services are generally like CPA, tax preparer, attorney. I'm not going to have those. I'm going to try to do everything myself. I'm operating out of my house. So I'm going to hide this rent category. Okay. So utilities, I'm paying it myself. So I'm just hiding this, I'm just trying to get these out, but you may not hide this based on what you're doing. I'm just trying to get it out of the way and only the ones that I'm focusing on. So other expenses here. So, I'm going to start shipping stuff. So, one of the things in month 4 here, I'm going to ramp up and buy a lot of shipping supplies. I need to refill my shipping supplies maybe here in September. And then of course I'm shipping a lot more here. So I'm buying more shipping supplies in November and December. Okay. So miscellaneous fee, I might have a miscellaneous fee here in 7 because I have a booth fee at the powwow, right? So we'll put a little booth fee in there, right? So I'm going to hide a couple of these other ones here just so you guys can see. Okay, so I'm leaving interest because I'm going to talk about interest here in a second. And I'm going to hide these. Okay, so okay, so I think I got everything on here. There was one other, maybe it was gasoline too. Put gasoline. Oh, it was telephone. Okay, so now I have kind of a very basic rough sketch of what I believe my business is going to be, right? And I thought about it, and this is now my startup budget, right? And I can start going through there. I could, even though I thought about this, I can use the daily tracker, then come back and revise these estimates after this month. But at least I've got something to go here. I want you guys to see something though. Down here we have $400 expenses and cash out, right? And then you bring that down, total cash out, but we don't have any cash sales and we didn't start with any cash on hand. So we actually have a negative number. And one of the first things that I said here when looking at this budget is you can't have negative cash, right? That's the one thing that you can have. You have to solve for that. So if you see a negative number, how am I going to solve for that? All right. So you have had to already have cash already. So because if you're spending this money, right, you're contributing that cash to the business. Other ways that you might do it, if this was further on, there's not a whole lot of room here in this budget because we're just doing it the startup budget, in the startup budget column. But if we were later on in the year, what we might do is we might try to sell more. What we might do is try to cut our other costs in our business, right, to not go negative. What oftentimes people do is they go and get a loan. And in this case, we're going to go get a loan, but our loan is going to be our credit card. So we go get a credit card here and we go get a $400. We just charge that stuff on the credit card. And so now you can see that goes to 0 and now we're positive again, right? But what that's going to do is now I'm going to have loan payments. And I'm going to have loan payments for the next 8 months. So I'm just going to plug these in here. And then I'm going to have interest expense as well, right? Because I'm holding that balance on my credit card. So I'm just giving an estimation on it of what interest would be. Okay. So you're thinking about this, right? Because I had a negative. How am I going to solve that? I got to use my credit card ahead of time. Maybe you have cash already to plug in, but you have to think about that for your business. And so now we plug that in, and now we have our startup budget. And this is exactly, what it is. And what the startup budget can look like. So we've talked about negative cash. We've talked about how we might solve that. we took out a loan. I'm just checking off in my mind here. I have a list here of everything I wanted to talk about. So a couple things before we leave this budget that I just wanted to alert you to, right? So one of the things that you might do is, like on purchases, we have $200 a month, right? That's our cost of goods sold. What we might want to do to make sure that we're going to be profitable is to put a cushion around some of these numbers. Maybe I'm going to spend $300 because some of the materials that I use is going to be wasted. Some of these I'm going to give away to friends, right? Some of these I'm going to keep. So you put that number up a little bit higher and see, am I still positive every month? Am I still making a profit, right? One of the things that we always advise in the business is putting brackets, especially around your revenue, the money that's coming into the business, right? So are you going to have, let's say it's 20% lower. Are you still positive? Are you still making money? If all of a sudden it goes negative, do you have a way to solve that negative cash balance, either because you have access to credit, access to a loan, you have additional savings that you might bring into the business. You're going to change how much you spend, right? This is why I say that the budget is a planning tool, because we're going to use this to plan all those scenarios if we see things like negative numbers, right? But we're also saying, okay, here's what what I believe is going to happen, but what if I'm too rosy in my projection? Right? Can I still make it work? Right? Because you want to make sure you can make it work, even if it's good. And then even if it's better, right? Maybe it's 20% higher. What am I going to do with that money now? Right? Do I have a plan for that? Am I going to invest? Am I just going to save it for the time I do have a downturn? Being able to think about those type of things as well. So one of the things that I haven't talked about, it's down here. So let me hide some of these as well. See if I can get this all on one line. Oh, almost. I'm going to shrink this up just a tad bit. So I hope this doesn't ruin the whole thing, but let's shrink up just oh gosh, it opened all the things up. Just my luck. Anyway, so what I was talking about down here is owner's withdrawal. So one of the things that we haven't talked about is what you're going to take for yourself out of this business. Now, maybe you have another job, and so you don't have to take anything for the business, and you can just and you can survive, and the business can, any money that you get in the business can just be reinvested. Okay, so but be thinking about that. If you need, let's say you need $1,000 from your business, maybe for the first few months you don't have to take anything out, but your plan is to quit your job, to spend your time doing this, and you need at least $1,000 from this business to pay the bills that you have, right? So you need to then budget that in, right? And that's all that is. So let's say at the $1,000 mark, excuse me, at the 7 month mark, I'm going to have to start taking $1,000 every month. Okay, am I still positive? I'm still positive. So that's good. I'm there. If I had to take it earlier, I have built up some reserves. So that's okay too. If I had to take it from the beginning, okay, now I'm negative. And if I have to take it from the beginning, what do I have to do, right? I have to increase sales. I have to delay taking it, right? These are all things, all planning tools that we're going to think about, right? This is why we're doing this, right? It's to do to do planning. So one final thing that I wanted to talk about in the webinar, let me get back here to my presentation. So this is what happens after we're done with this, okay? So we want to reevaluate. So how often do we reevaluate? Do we do it monthly, quarterly, semi-annually? Maybe you do it as soon as you're done with a month of the daily tracker. That's up to you. It's probably going to be how far you're off, right? So if you're deviating from your budget numbers, change the budget, with your new information as soon as you know that, right? We always talk about, when we're doing business planning, we always talk about the business plan as a living, breathing document, right? So that, and what we mean by that is that you don't just write this one time and then put it in the shelf, right? It's supposed to be your plan. It's supposed to be your roadmap. This budget is the same type of thing, right? Don't just construct it just to construct it. construct it because it's going to be a tool that you use, right? It's going to be a tool to where you can plan at the beginning of a year to say, these are the different things that I need to arrange to make sure that I never go negative cash. I always have the money. I'm going to be profitable this year. But review it as you go through the year to make sure that that the projections that you made are in fact lining up with what's actually happening. And if they're not, change it up a little bit, right? And this is just a plug for the importance of accounting in your business, right? So the only way that you're going to know if those numbers are deviating is if you're doing some accounting. And you don't have to go all the way, like one of the classes that we do is QuickBooks. You don't have to go all the way to do a QuickBooks class and move all the way over there and do all this or hire a bookkeeper. In the last class in record keeping, we talked about some of the simple ways that you can use even a shoebox method and a notebook to keep records. So if you don't have very many transactions, you can do those things with just using a notebook and adding and getting out the adding machine. But be doing that, be keeping records so that you can go back and make sure that, okay, my budget's this, but when I added up all my receipts, I'm spending way more over here. Now I need to readjust my budget because if I continue to spend like this, I'm going to be negative, or I'm not making any money anymore doing it. And I need to really fundamentally change how I do the business because I don't want to do all this work and not make money, So that's the thing. We want to reevaluate, always be going back to the budget. And I think what will happen is when you start out fresh, especially if you don't have those previous numbers, that's when you're going to want to do it more often. As you go, as you become a larger entity, you have previous numbers. Maybe it's only quarterly or semi-annually. I'll tell you, for IDRS, we have a quarterly budget board meeting, and at those quarterly board meetings, I review the budget, and if anything needs to be changed, I go to the board with approval to change it, right? So even in my organization, that's what we're doing, right? Because we want to make sure that our budget is aligned with what's actually happening. Okay. Okay, let's see what else. I think that's about it. So I'm sorry to keep you for an hour over. So let me just go through here and see what questions are. So Shannon asked, what about hours? Do you add that in? So hours, no, you would not add in. Only things you're putting in the budget is financial and financial numbers, right? So dollars, right? So the hours is more for you to calculate to say, are my estimates of how much I'm going to make realistic? And one of the earliest ways to test that is, can you even produce that much, right? So give you an example on the DJ business, right? If I said I'm going to make, so I gave that example earlier, I'm going to do 10 times $100 an hour, right? And I'm going to do that 52 weeks a year, right? So that's $52,000. Is that realistic? Well, one of the ways you would, so this isn't in hours, but what I would do is I'd just be looking at the calendar. One of those weeks is going to be Christmas, right? It may be probably close to a weekend. One of those weekends, right, we know is going to be Thanksgiving. Probably not a whole lot of weddings going on in Thanksgiving, right? So this happened again. I'm probably not going to be working on those weekends. So I'm going to have to pare back. There may be times when we have just issues where we can't work, or we want to take some time off, or there's dead periods, right? Those are the trends depending on what is in your industry, right? With retail, you tend to have a lull after Christmas. So those are the things that you're going to want to do to kind of just check out, is the projections that I originally made realistic? And that's just one realistic tool. Camille said, Chris and I would like to receive the recording of the class he is talking about. And I will have to check. You might have to put a little bit more, because sometimes I'm just talking and off the top of my head, I am not immediately seeing that. I'm going here because I'm seeing something in the Q&A. If we need help with spreadsheets, can we reach out? By all means. That's the easiest question to answer, Sandy. So Sandy, any help you need, business planning, just talking about your business. Somebody called just the other day and wanted to talk about the difference between sole proprietor and LLCs. And we're going to talk a little bit about, I just wanted everybody to hold on for just one more one more minute or 2 more minutes. I have a couple other things I want to close with, but we're here to help. And this is what we do. We provide free, free training. Obviously, these trainings are free, but our counseling, our technical assistance is totally free of charge as well. And so we're here to help you out. So please, any questions you have about these spreadsheets, please call us and we'd be more than happy to review them, to tell you how they work. If there's errors in them, we'll fix them for you. If you don't have Excel, we'll make sure they get transferred onto Google Sheets. So, where there's a free option, whatever it is, we want to be here to help you out. So let me just finish with just a couple other things. If there's other questions, please put them in and I will answer them. But just a few things I want to close on. I want to give you some promos of what's coming up. First of all, grants. Okay, today on the 26th, LISC just opened the last announced round of their Rural Relief Small Business Grant. So one of our social media specialists, our social media guru, Roxanne Best, she actually received this grant back in November, $20,000. So if you live in a community of under 50,000 people, we encourage you to apply for this. This is only going to be open until February 2nd. Okay, so we've set up on our website, nativebiz.org. If you go to /LISC, Lynn, if you could put that in the chat box just so people can click on it. If you go there is all the information about that grant, and there's a link, both the request assistance for us to help you with the grant if you need help with it, and there's a link directly to the application. Okay. Also in California here, so we are about to start the California Small Business COVID-19 Relief Grant. 3 different levels of funding for this grant: $5,000, $15,000, and $25,000. This grant is going to open again on February 2nd. Okay, so anytime there's free money, these are free money. If you get awarded the grant, there may be some restrictions on what you're supposed to spend it on, but there is no you do not pay these back. This is not a loan. This is a grant. This is money to your business to help you in this time of need. So if you want more information about this, nativebiz.org /CalCOVID. And what we're doing, we provided assistance to tons of people on these 2 grants, and we're here to help you to provide more. And maybe these aren't for you, but they may be for other people. So I want to always encourage you with anything that we're talking about. If you know of somebody that would benefit, please share. So I also want to mention a couple other things as well we have coming up. Tomorrow morning, 2020 social media planning, really looking at your social media calendar, making sure you always have something to post. Okay, that's going to be tomorrow, 9 a.m. Pacific, 10 a.m. Mountain, 11 a.m. Central. So sign up. There is a link to ntv.bz /social media. You click on that link, which I hope will go into the chat box. That will take you immediately to the registration page, and you can come and sign up for that. And that's going to be presented by Roxanne Best, like I said, our social media guru. We're going to be doing a webinar on February 1st about that California Small Business COVID-19 Relief Grant Program that I just talked about. Tell you all about since we are in round 2, and just let you know about that grant. $237 million will be given away in California, right? So make sure if you're eligible, make sure you apply, because you never know if you're going to get funded. You may not get funded, but it's totally free to apply as well. So do that. So we're going to be doing that webinar, tell you about what to expect for round 2, and the ntv.bz /California COVID 3, because this is our 3rd webinar on that grant program. And finally, this is very big, right? Because I know in here we have a lot of native artists that may be selling their things locally, or may only be utilizing Facebook and selling in their community. I want to encourage you guys. Etsy is a great program, and we have one of the premier Etsy experts in the country, Mary Beth Timothy. I hope she's still online for her to hear me say this. So we're actually going to be doing over 4 days. We're going to be presenting our entire Etsy craft entrepreneurship class, our workshop that we do. It's a 4-session workshop. Each session is 2 hours long, and we go through the entire process of setting up your Etsy store, why it's important, how to drive people to your store, how to position your products, you know, how, and then I don't have the slide in here, but a week later, Roxanne's going to be teaching the photography class, and that's going to do, it's basically how to photograph your products to put them on Etsy. So we're trying to make sure that you have all the knowledge. We're not just saying, hey, go do Etsy and turn you loose. We want you guys to know exactly how to do it. And with any of these things, if you need assistance, if you say, yeah, I watched the videos, I went to the class, but I still need help, we're here to provide that assistance to you. So, and then my final slide, because I know I've kept you a long time, but my final slide, just make sure you guys know how to get us and encourage you guys to check us out. nativebiz.org, that's our website. That's where we post all information about upcoming events, upcoming webinars, upcoming online workshops. When we get back and can go in community again, we'll post that there as well. Also, that's where you can sign up for assistance, just general technical assistance for your business, for assistance on the LISC grant, and assistance on the California COVID grant. All that is there at nativebiz.org. Find us on Facebook. We post all this stuff that's coming up. And we have you know, all kinds of questions we're asking there, polls and that kind of stuff. So that is facebook.com/IDRS Acorn Project. We're doing the same. We know there's some people that don't use Facebook, but they like Instagram. So we're on Instagram.com/IDRS Acorn Project, or IDRS_Acorn_ project. That's a little bit harder. Find us on YouTube. All right. So I had to make up my own YouTube link, ntv.bz/YouTube, because the YouTube link is so ugly. So one of the things that you can do as a favor for us is if you go to our YouTube channel and you click subscribe, once we get 100 subscribers, and what we do on our YouTube channel is we post these videos and we post it, you know, so we just post them up there so you can go there and check them out and hit the replay. And so you can see some of the other webinars and online trainings that we've done over the past year or so. So click there, go there, click subscribe, because once we get 100 subscribers, I can officially change the name, and it'll be something like, hopefully, youtube.com/IDRS Acorn Project. That's the goal. So with that, let me just see. I think we have a couple questions. Oh, Mary Beth Timothy, I applied for the last round, but haven't heard anything. Do I apply again? Yes, on the LISC grant. So what the LISC, they have said, if you were supposed to be notified if you got the grant by the 22nd of January. If you did not get notified, you were to by the 22nd, you were to assume that you did not get selected, and each round is independent, and so you're going to apply again for that grant. So today, go back on and upload the application again. So with that, I'm going to stick around for another minute until everybody heads off, but thank you very much. I'm sorry I kept you so long. Whole bunch of information. I hope you guys got a lot out of this. I hope this is some good information. You use this, and like I, always encourage you, please contact us if you need any help. Good luck to everybody, and we'll see you around soon. Thanks and take care, guys.